first day of June. We have Bill Baruch, the president of Blue Line Futures, joining us to talk financials. Bill, welcome. I want to get your thoughts on rates and currencies. But first, your take on, what's been playing out here in terms of the ES the past few weeks, a volatile past few weeks, from something like up 8% to down almost 20% from the January highs. This what a market coming to grips with higher rates, Treasury Secretary that got it wrong, and inflation that has investors taking a step back, and someone a bit uncertain in terms of the future is going to look like?
You know, it's a great question. I was actually sitting here writing a morning note to clients and really sort of talking about how in our research we put a bias out, turned cautiously bullish bias, maybe a few days early, in the market. But we really walked people through this bottoming process. There was a Fed that got a little less hawkish through some comments last week and the week before. You had a bit of sellers exhaustion, and you had Shanghai also reopening. So there was a number of tailwinds that were brewing. And then there was the technicals. You had a very beautiful inverse head and shoulders. You had in the S&P as well, the NASDAQ, and that red shoulder built out in the second half of last week and responded. And then we really kind of broke through some trendline resistance. I feel a lot of people, they call it a bear market rally, whatever it is. I think a lot of people were off sides, and you're seeing money kind of flow in. You're seeing shorts covering. But one thing we've been hitting on here for our clients is monetizing the move. And, whether you're a trader, monetizing the move means just maybe watching a few rounds, getting out of the long futures you may have had, or at least defining what risk you now have on the table. Maybe we get a move up to the 50-day moving average. I'm not calling this really, a bear market rally. I think there's, some staying power potentially here, but still you have to have that game plan, monetize your move. Even on the wealth management side, I'm starting to raise about 2.5% to 5% cash. We really had about zero cash, building into some positions through the last week. So, it's all about sticking to your game plan and, like I said, monetizing things.
Bill, I like that. How much of that is dependent on rates pulling back? Because we've seen them come off a little bit recently. That's probably a big part of why the NASDAQ's been able to rally off of recent lows ultimately. And even the dollar has come off. I mean, Yellen made it very clear, though. She said there could be some more shocks along the way.
Yeah, you're right. It's still a sticky situation out here. And, I think rates were definitely a key driver here. You saw the 10-year pull back, yields down to, 2.7 or so. We're back up to near 2.9. The yield itself is pushing through the 21-day moving average on the 10-year. The futures are pushing through the 21-day moving average. I think the yields haven't quite yet. But if you start seeing weakness in the Treasury space, that could get people nervous here in the near term. And, we got non-farm payroll coming up. So there's a lot of data to really digest, not to mention we have quantitative tightening. I mean, it's arguably quantitative tightening. They're not deliberately selling off these bonds, but they're going to start letting these mature. I think June 15th is when some of these bonds start maturing, and the Fed does not reinvest those proceeds. So we still have, a sort of a really sticky situation. I think it all really relies on, though, what do we hear from these Fed members? And you have St. Louis Fed President Bullard later today. If he starts taking more of a hawkish tone, we heard from Fed Governor Waller. He was a bit more hawkish that we're not going to see, they're not going to pull back from 50 basis point hikes just after the next two meetings. But he is expected to be like that. So is Bullard. What does their tone do? Does it sort of, get the 10-year back above 3% and put the tech space back on ice? So those are the type of things that we're watching very closely as we lead into non-farm payroll.
Talk to me a little bit about, here we actually have a look at, as you mentioned here, rates, treasuries. This is the futures contract, which have come off recent lows back to the 50-day moving average. You said above that 21-day. I wanted to point out yields ultimately a reflection thereof. Again, with the futures coming off recent lows, you can see how yields, rates have come off recent highs. We have the 30-year up to 3.27, the 10-year up to 3.16. We were talking earlier in the show about some of the Shanghai lockdowns being lifted, and in terms of what we're seeing in Hong Kong. What's the impact of that on currency markets, the dollar, for example, rates, and financials in general?
Yeah, I watched that U.S. dollar CNH, the Chinese Yuan against the U.S. dollar. I think you have to be watching that, and it's come off the recent highs. The U.S. dollar's weakened off the recent highs against the Yuan. I think that's helps stabilize, the overall, global markets. Metals certainly are not showing much. You're seeing gold lower. You're seeing silver lower here on the week. But I think the U.S. dollar as an index, I mean, is been buoyed a bit as the yen has sold off pretty harshly as the rates have moved back up. So again, you're seeing this sort of dynamic where we're up near 3%, and rates are not rolling over. The treasuries are not really significantly rallying. They're at least in a pause. But there's definitely some everything sort of tied together. I think with Shanghai opening up, it was definitely a catalyst for crude oil. To really sort of move through this range. And crude oil broke out above the 116.5 level, which was the previous highs in the July contract, as well as sort of I think it was a 618 retracement on the continuous chart. It was a pretty significant level it got out above. And you saw the spike yesterday, $3.50 as it moved through it. That's something that's going to really underpin rates higher. It's going to weigh on the treasury space too, as it stokes that inflation narrative. So we could be in an area. One other thing to really watch is China opens up. If the global demand fears on oil sort of don't fall apart here. If we talk about Russia more Russia won't hold to that production pact. We may hear more from OPEC tomorrow. If crude continues to rally and really break out from here, that's something that's going to keep yields higher and could inversely hurt the equity market too. So again, a lot of dynamics really tied together, but if that U.S. dollar rallies and rates rally, it's going to hurt the risk on space.
Here's a look at that. Crude oil and the TNX both have been very closely tied recently. Earlier in the show, we were talking a little bit about RBOB. Speaking of closely tied to crude, obviously, historically the two are, but it seems like recently RBOB's been leading a little bit, kind of feeding into some of those inflation concerns. Talk to us a little bit about how, I mentioned we kind of had a lackluster session in the end of the month of May. Overnight, as we look into the beginning of June, mostly range bound in the indices, as we seems like are in a bit of a holding pattern here now, awaiting some of the jobs data due out a little bit later on in the week. That's the major focal point, correct me if I'm wrong, Bill, as we head into the second half here right now. We want to see, again, as there's some concerns about the economy in a higher rate environment. Hopefully there will not be concerns raised about the labor conditions here, because that's been one of the pillars of strength, and that's been one of the things the Fed's leaning on at this point.
It is. I think with the jobless claims tomorrow, we have non-farm productivity, unit labor costs, I believe, too. So that's something that people are really beginning to watch very closely. Where is there a wage price spiral? And so what's the earnings growth or the wage growth on Friday? All really tied together. It's sort of a really odd dynamic because if we really see the wage inflation pick up, it could be a reason for the Fed to get a little more hawkish. At the same time, you're seeing this gasoline prices, tending to rise, and that's going to weigh on the consumer. So even though you might see wage inflation within the data, there's going to be a really big chunk of the country that's not going to be that doesn't have that sort of wage inflation, and then they're paying more on the gas at the pump. So it's a very difficult dynamic that the Fed is trying to thread this needle. But all of our narrative really has relied on that April and May inflation data. It was never supposed to be an inflection point. It's really that June, July, and August numbers that we get in July, August, and September. So we have this bit of a window right now where I don't want to call it a Goldilocks scenario because this isn't really anything great out there, but could be become a bit of a Goldilocks scenario that's in markets or risk assets could elevate if yields stay tame. But as we move into July and get that June inflation data, it's going to be a Jackson Hole showdown in August. I mean, you got these numbers that are going to be coming out, and if inflation doesn't dissipate, I expect it to. I mean, look at the PCE that came out here for April last, I think it was April's read here last week, was 4.9%. So if we start to see inflation by the metrics that the Fed uses just dissipate a little bit, then we could see a very bullish reaction in risk assets. But if it doesn't, then again, it's Jackson Hole showdown. We could see a very hawkish pivot from the Fed that leads into that September meeting.
Gives us something to keep an eye on in addition to everything else. Bill, final thought here, and we'll let you get on your way as the Fed tries to thread that needle. I wanted to get your opinion on the fundamentals behind this recent run-up in Bitcoin. We were just talking technicals before the break. Rick Caddy joined us to identify some of the key levels to watch there. But what do you see behind the recent lift? Is this kind of just a rising tide lifts all boats?
Yeah, I actually listened to the segment. It was a really good discussion you guys had, and I saw that he pointed out the 21-day moving average. I love watching that. When I'm seeing where near-term momentum could begin shifting hands. Something similar. The S&P did not get above that 21-day moving average until it got since April 21st, we got above it at 40.38. So I'd continue to watch that 21-day moving average very closely. If Bitcoin can really get out above there decisively, there could be some legs, but you got to look down the space here. I mean, Ethereum had a decent move, but something like Solana hasn't moved up so much here in the last couple of days. So, is it just Bitcoin kind of getting a reaction? And don't forget, it was the end of the month. So futures contracts do roll off at the end of the month. And I know, as a longtime gold trader, these end of the months can, especially like you're seeing a June expiration right now at the end of May, can create some volatility in the space. So I'm not sure how much of impact the Bitcoin futures are now having on just the broad Bitcoin market at the end of the month. I'm sure there's some people tightening some books up as well. So I think today could be, and tomorrow will be a pretty important day to see where Bitcoin closes, at least the future session, and kind of hang stable into the overnight, and how it reacts to that 21-day moving average.
Bill, I like that a lot. I didn't factor into that end of the month activity. I had mentioned earlier in the show how the indices saw kind of a lackluster session into close out the month of May. Maybe this is some short covering activity. We always talk about how in a bear market, these rallies are strong, they're eyebrow raising, but short lived. And that's because, again, it seems like the follow through to the upside amidst some of that short covering or less initiative type opening position trading. The follow through is just limited. So it gives us something to watch here, to say the least, as we are right on that 21-day moving average. Bill Baruch, appreciate you joining us here to talk financial markets here. And, well, Bill's joining us from Blue Line Futures this morning.